Thanks for joining us on this video where we're going to discuss purchasing a leasehold property from the perspective of a low-risk landlord who wants to buy an investment and hold it and tenant it long term. And leasehold properties have different issues to freehold properties that landlords need to be aware of. So to discuss this, I'm delighted to be joined by our legal partner Anthony Gold and partner of Anthony Gold, Ian Mitchell, who's in the Leasehold Services division here at Anthony Gold in London. And Ian, quite a different outlook for landlords looking to buy a leasehold property. There's certain things that they should take on board and consider before they acquire such a property. What are those things?
Well, certainly the length of the lease is paramount. If the lease is, for example, less than 80 years, it's going to be a distressed asset. It will need a lease extension almost to that point.
Mm-hmm.
So that the investor should really get into discussions with the vendor on who the landlord is, whether they're prepared to grant a lease, how much that'll cost.
Mm-hmm.
In some instances, the landlord might be the type of landlord actually where you're better off getting the vendor to serve a statutory notice to extend the lease.
Mm-hmm.
So that's where the person in situ who's owned the flat for more than 2 years will exercise their statutory rights to extend the lease. And so you have to factor in that notice being assigned to the actual investor buying the flat, mm-hmm. so that they can continue the process post completion.
Mm-hmm. But that could result in having to be a cash purchase. So landlords looking to buy with buy-to-let finance would not be really looking at a property with a low lease, would they? So they should be looking at the duration of the lease.
So certainly when it comes to low leases, the mortgage market will be very restricted. Mm-hmm. Most lenders will not lend on flats that have got a lease length of less than 75 years. Some lenders, the market for finances, it gets even more restricted if you go below that point. To the extent where actually you might be cash funding, the only viable option to buy that flat might be a cash purchase. But that plays into the investor's hands sometimes in terms of getting the bargain. Mm-hmm. So not only do they have to look at the price and discounting a substantial sum off the cost of the flat to account for the extension premium and the professional costs, they're also using their cash bargaining power to further deduct. And you're certainly in a strong position when you're negotiating with a low lease flat owner who doesn't have the ability to put the extension on themselves. Maybe some arrangement to put the extension on a completion. That's not always possible. So yes, the length of lease is absolutely paramount. It can be not only an expensive lesson if you buy a low lease and you don't realise it needs extending, because you'd have to sit there for 2 years and wait before you could actually exercise the rights yourself to extend. And by the time you get to that point, the property market's probably gone up, the unexpired term of the lease has dropped again, and the actual price payable for the extension would be even more. So beware of the cost of the extension. Always good to do it now. Now is the right time to extend. Try and get the person selling to put the extension on in conjunction with you buying it. If not, you're going to do the extension process and run it afterwards. And also the mortgage market's extremely restricted on low leases. You're going to be looking to rent the flat out, so I think you have to look at the terms of the lease to see whether they actually permit you to rent the flat out on a residential letting. Most flats do, but you might find that there's a charge applicable, an administration charge payable to the freeholder every time you tenant the flat. We do commonly get clients phoning us saying, I've had a letter from the freeholder or the managing agent, and they're looking for £100 plus VAT as a charge payable just for the event that they suspect they're renting the flat out, and they say, well, we want it per annum, or we want it per tenancy. I mean, you have to look at the terms of the lease, and that will govern whether there is a fee payable on an annual basis if you're letting, or whether it's on a new renewal tenancy basis. It may also tell you what the fee is, but if if there is a fee payable and it's not absolutely prescribed in the lease, then these types of charges are subject to regulation. They are effectively an administration charge, which there is a requirement for those charges to be reasonable under the Common Whole Leasehold Reform Act 2002, and you can apply to the first tier property tribunal to have those charges assessed. So yeah, definitely look at whether you can rent the flat out if that's your intention, because if you're buy-to-let investor, that's an absolute nightmare if you find the landlord's actually taking forfeiture action or a contending breach of lease because you bought the place and you're not residing in the property on an ordinary residential basis. So you're also, I think the last factor I think you need to look at as well, because it is all about the profit on the buy-to-let. You're looking at what the likely service charges are going to be. You don't want to get into a situation where excessive service charges are stripping your profit bottom line. You'll know what a regular service charge should be. Get the history of the service charges from the last 3-4 years accounts from the outgoing from the managing agents or the freeholder. That's always done when you buy a leasehold property.
Absolutely.
LEP1s or an LEP1 request is sent to the managing agent, and they're required to disclose this information. Also look at the building, whether it actually needs major works, because the last thing you need is to step into the shoes of the vendor and get a bill for an advanced service charge from the landlord on your first day of ownership for replacement of the roof or other long-term maintenance issues that maybe just due to the fact that the landlord's neglected the building, not really bothered to do much for 20-30 years, and suddenly it's your turn to pay because you happen to own the lease. If there's a sinking fund, it's less of a problem, but a lot of the time when you're looking at small blocks of flats with 3-4 flats, there isn't provision in the lease for a sinking fund. So whoever is in situ at the time and owns the flat is effectively paying for the repairs. So yeah, and that it is devastating when we get client calls saying, do I have to pay the landlord £100,000 because I've just had an advanced service charge bill and Section 20 major works consultation notice through the door? And I mean, our answer to most of those clients is, well, terms of your lease will govern whether you should and you have to pay the advance demand. Probably the case is yes, and your landlord's required to undertake the consultation process, but there comes a point when you can get into arguments with the landlord on whether the works are necessary, whether the costings are reasonable. You can feed into the consultation process with the landlord. But the point, I suppose, to challenge the works is when they've been undertaken. So a lot of people think, oh, that's too expensive. But the asset test, once the works have actually been carried out, that's when you can challenge them. It's very difficult to challenge a landlord on the cost of works that they actually haven't undertaken, unless you can show that the lease doesn't actually oblige the landlord to undertake those works. So again, the situation which I don't like to get phone calls on, but we can give you the advice if you're in that situation, and you've received major works consultation notices from the landlord.
Well, clearly a good legal advisor, solicitor, would be able to help a landlord with these kind of inquiries during the conveyancing process, but it's good to be aware of them. And I think you mentioned in your first point that actually a short lease can actually be an investment opportunity to make some serious uplift in a property by extending the lease, and we have actually recorded a video on that topic as well. So just really leasehold properties, some landlords shy away from them because the service charges eat into their cash flow, but we've just heard yesterday that 1 and 2 bed flats have enjoyed better capital appreciation in some areas than some houses. So it's really understanding and researching the potential investment from all angles, isn't it?
And if you're buying in a block where it's well managed, then there's not going to be the surprises of the cyclic works that have been undertaken maybe 20 years too late and the cost has gone through. So well managed block, you'll just with every property asset you've got to maintain it.
Quite.
You ensure you maintain your own house. That's what should happen with a flat, and it should be done regularly, so the actual cost of that spread in an even fashion over the timeline of the asset. So, beware when you're buying into a block that doesn't look like it's been well managed. It's not always the case that the landlord will tell you that they're going to undertake the works. The idea might just come to them, a week or two after you purchased, not when you inquired whether they had an intention to do substantial works.
Well, great advice there, Ian. Thank you very much for joining me on this video. I hope you found it useful.